Yes, so good morning, my dear friends. I'm sorry, in initial time we were not having the voice, but I assume that now you can listen to me properly. Yes or no, you can give me reply on chat. Can you hear me properly? Everyone. Okay, thank you, Dipesh. Thanks for the reply. Thank you, everyone. Thank you. So, first of all, happy Independence Day. So we are going to celebrate freedom today. Okay, so India got freedom, and today, after listening to this webinar, we are going to get the way to achieve financial freedom. So today is the Independence Day. We are going to achieve financial freedom. Very nice. Thank you. So again, I welcome all of you to the smart wealth creation ideas. How equity plus safety can create prosperity. So we are going to have fantastic session today. I just want your participation during next 60 minutes. At sharp 11:05, we will complete this session. We are from Finideas, investment के ideas मतलब Finideas. We are SEBI registered investment advisor. And the disclaimer is that equity investments are subject to market risk. Kindly consult your financial advisor before having any kind of investments. Friends, Finideas is dealing with more than 75 members of exchange as of now. We are 26th company in India to register our algorithms so that you can get speed, accuracy, and consistency. And we have trained more than 40,000 traders and investors till now. The mission of Finideas is, as today is Independence Day, so it is very relevant today. Again, the mission of Finideas is providing transparent solution to everyone for achieving financial freedom. We want our participants to achieve financial freedom. And the vision of Finideas will manage wealth of rupees 6,000 crores and serve HNIs and members of exchange globally by 31st March 2023. We are having our presence in these 4 countries, India, Dubai, US, and Saudi Arabia, and these 12 cities. So if you want to have any kind of local support, you can get from these locations. And during this lockdown period, we have completed more than 230 webinars. More than 33,000 people have registered. More than 20,000 people have participated. And more than 90 crores fund we have added during this lockdown period. Why we are showing this slide? We want to make you understand that if we can use technology extensively, it can make wonders in our life. So whatever business you guys are having, kindly use technology as much as possible. And now let us understand index long-term strategy. How low risk can generate high returns. So friends, as we are talking about investments over here, so always we first discuss property. Why properties? A lot of people invest money in property because they are getting too confidence from property. Confidence number one, that property can't become zero. And number two, confidence from property is that if I can hold it, sooner or later I get appreciation. So these kind of two confidence we get from property. But when we invest money in equity, we don't get this kind of confidence. In equity, our money can become zero also if we select wrong stock. So that means indirectly we are having high risk in equity segment as well as we can generate high returns also. But we wanted to have low risk over here. So we have taken two decisions over here. Decision number one, that we will not trade in individual equities. That means no direct shares, no Reliance, no Tata Steel, no Suzlon, no Educom. So if we will not invest in direct equity, where are we going to invest money? We will invest money in index, simple. What exactly the index is? So in India, we are having normally two exchanges, BSE and NSE. The index name of BSE is Sensex. My question to all of you is, what is the index name of NSE? NSE के index का क्या नाम है? Come on, BSE के index का नाम Sensex. Very nice, Dipesh. Very good. Everyone. What is the index name of NSE? Very nice. So the index name of NSE is Nifty. Now, what exactly the Nifty is? Nifty is the average of top 50 stocks of country. As of now, those top 50 stocks are Reliance, HDFC Bank, TCS, etc. But before some time, we were having Satyam, Arcom also in those 50 stocks. But as soon as their valuation has fallen down and they reached to 51 number, they automatically moved out and some new stocks came in. What exactly the meaning is? The meaning is that if index consists only top 50 stocks and if it removes weak stocks, and considers new stocks, those are strong stocks. So automatically index is giving us the confidence that it cannot become zero. Index can't become zero because it is the average of top 50 stocks of country. Very nice. So it cannot become zero. Now the second point is how we calculate the valuation. Before some time, valuation of Reliance was around 13 lakh crore. TCS was around 12 lakh crore. If we total the 50 stocks valuation, top 50 stocks of country valuation, that was around 117 lakh crore. And this 117 lakh crore was equal to 15,000 index. So what does it mean? It means that when price of Reliance increases, the value of company will increase. When the value of company will increase, the total of 50 stocks will increase and simultaneously the index will rise. And the same rule is applicable when market is falling down. Now the smart question to all of you. The question is that if the richest company of India today is having the valuation of 13 lakh crore, आज इंडिया की जो सबसे करोड़पति कंपनी है वो 13 लाख करोड़ की है, then whoever will be the superpower of India after 5 years, 10 years, 15 years, 20 years, whoever will be the superpower of the India, logically that company should have valuation above 13 lakh crore. Yes or no? What do you say? Though it is not guaranteed, but logically that company should have the valuation above 13 lakh crore. Yes or no? If the richest company today is having the valuation above 13 lakh crore, then whoever will be the superpower after 5, 10, 20 years, that company should have the valuation above 13 lakh crore. Very nice. If that will be about 13 lakh crore, then the total of 50 stocks at that time will have the joint valuation above 117 lakh crore. And simultaneously the index will be above 15,000. So what exactly the learning is? The learning is very simple. And today, because we are celebrating Independence Day, so we should understand how we can achieve financial freedom. So here, what exactly the learning is? The learning is that whatever confidence we are getting from the properties, that it cannot become zero, sooner or later it will rise. Both the confidence we are getting from the index of that country. Because index is the average of top 30, top 50, top 100 stocks of country. It automatically removes the weak stock. So indirectly it cannot become zero. And because it is directly related with the market capitalization of top 50 stock, sooner or later it will rise. Look at the past graph of the index. Index has gone up many times and fallen down many times. But the learning is that whenever it has fallen down, it made new high. Again fell down, created new high. Fell down, made new high. Fell down, created new high, and so on. The logic is very simple. Because it removes the weak stocks that normally a retail investor cannot do. Retail investor can't do this. He gets the affection with the stock which is falling down. While here it removes the stocks which fall down. And that is why sooner or later it rises. So the next point comes. This is the myth. Normally we are getting this question. Whenever we listen about the derivatives, we feel that it is the speculative thing. We need to understand. Because of derivatives, you can protect your risk. Derivatives are the instrument where you can have the limited risk. It is up to us how we are using derivatives. The origin of derivatives, the birth of derivatives has done to protect, to hedge the risk. Now, a lot of people are doing speculation. That is altogether the different matter. But we are going to understand the crisp of derivatives today. Here now we are going to understand the next point, that is equity plus safety creates prosperity. We understand that for growth, equity is important. But simultaneously, we should have the safety also. So what can we do? We can make the combination of equity plus derivatives. So first we will buy the index. Suppose index is running at 10,000. So we will invest 10,000 rupees and we will buy the index. Because we understand that index cannot become zero, sooner or later it will rise. And simultaneously we will buy the protection of that index. What exactly the protection is? The protection is put option. If we consider the annual premium of put option of last 5, 6, 7 years, it almost comes at near 5% a year. So that means for 10,000 rupee index, we need to invest 500 rupee more to protect it for a year. So for others, the cost of index will reach to 10,000. But for us, the cost will reach to 10,500 because we have protected it. So we have increased our cost, but simultaneously we have got the fantastic advantage that whenever market will fall down, my 10,000 is going to remain protected. This is very important. That means my principal is going to remain protected if market will fall down. Indirectly, it means suppose I have invested rupees 1 crore. So my 1 crore will never go below 95 lakh in any situation in full 1 year. So my maximum risk is premium only. Yes or no? Come on. I need the confirmation from your side. If I buy the index and simultaneously if I buy the put option, so indirectly I am getting the limited risk downside. So this is the great feature. The biggest risk in the equity market is that it may fall down and we can lose heavily. And if we can protect that risk, it can make wonders in our life. So the best point is that now we are protected downside. So what will be the side effect of this? Definitely, whenever we are going to get some advantage, there will be some side effect also. So the side effect is that if market remains at the same level from 10,000 to 10,000 only, then this premium we are going to lose after a year. This we will lose. So my worst case scenario will be, suppose in 2021 index is running at 10,000. 4 years has gone. We have reached to 2025, still index is running at 10,000 only. So if index will remain at the same level for 4 years, then whatever premium we have paid in during these 4 years, that we are going to lose. Yes or no, my dear friends? I am taking it step by step so that you can understand the complete concept very easily. So first we understood why we are buying index. Then we understood what is the advantage of buying the protection. Now we are understanding what is the disadvantage of buying the protection. So suppose in between 2022, 23, 24, your index has gone up from 10,000 to 12,000. Like 2 years back, index has gone up from 10 to 12. But again, it has fallen down to 8,000 like last year. Again, it has gone up like this year. Again, it has fallen down. Suppose you have made the portfolio of rupees 1 crore. So now definitely you are going to protect it. So you need to pay the protection cost, that is called premium. You will pay 5 lakh rupee premium to protect this 1 crore portfolio. Now I need your active participation. In next 3 minutes, you are going to understand altogether a fantastic learning. Next year, market has gone up. Index has gone up from 10,000 to 12,000. So index has gone up by 20%. My question is, what will be the value of your portfolio of rupees 1 crore? At 10,000, you have made the portfolio of rupees 1 crore. Market has reached to 12,000. So index has gone up by 20%. What will be the value of your portfolio? Very nice, very nice, very good. Everyone. The more you guys are going to participate, the more you are going to learn. And the more you will learn, the more you are going to earn. Very nice. So my portfolio will reach to 1.2 crore. We are going to earn 15 lakhs only because 5 lakh rupee we have paid against the premium. Now next year we are going to protect the portfolio of rupees 1.2 crore. So my portfolio valuation has gone up. So definitely my premium will also rise. I need to pay more premium. So I will pay 6 lakh rupee. Now next year market has fallen down from 12,000 to 8,000. So market has fallen down by 33%. My question is, what will be the value of your portfolio? This is very important. Market has fallen down from 12,000 to 8,000. Market has fallen down by 33%. What will be the value of your portfolio? Everyone. You guys are participating fantastically. Very nice. So your portfolio will remain constant to 1.2 crore only. Now this is the beauty of this strategy. Logically, your portfolio will reach to 80 lakhs. But 40 lakhs rupees that you have lost, that you are going to get back from this put option. We have bought this put option for this reason only, no? That whenever market will fall down, we will get this premium back. We will get this difference back. Yeah, Dipesh, we have not considered the premium over here. Your question is, we are going to consider it. Kindly hold it. As of now, we are taking the rounding figure so that we can understand the example easily. It is just the hypothetical example. So we will consider it. So again, we have got the 40 lakhs rupees from this put option. What we are going to do of that 40 lakhs rupee? we will buy new equity from that claim amount at 8,000. So automatically our equity will rise. Number of equity share will rise and my portfolio will remain constant to 1.2 crore. Did you get this point? Come on. Did you get this point? This is very important to understand. So my portfolio equity shares has gone up. My portfolio valuation has remained constant. Again, I will pay the premium next year. Market has recovered from 8,000 to 12,000. So market has gone up by 50%. My intelligent question to all of you is, what will be the value of my portfolio? Come on. Index has gone up by 50%. It has recovered. What will be the value of my portfolio? Very nice. Very nice. So my portfolio valuation will reach to 1.8 crore. Again, this is the second beauty of this product. When market has fallen down, you remain constant. When market recovered, market has just recovered, but you have created new high. Again, you have paid the premium next year. Same story, market has fallen down, but you are going to remain constant. What exactly the learning is? In 4 years, index remained constant from 10 to 10 only. But your 1 crore portfolio reached to 1.8 crore. Why? Because you have bought this put option. You have paid the premium over here. 5 plus 6, 11 lakhs. Plus 6, 17 lakhs. Plus 9, 26 lakh rupee you have paid. So net, you are not going to receive 1.8 crore. Rather, you are going to receive around 1.5 crore. But the learning is, in 4 years, index remained constant. But you have grown. Friend, this was the hypothetical example. You must like to see the real data. Let us see that. In last 18 years, index has gone up by 13 times. Index has moved up by 13 times. And people who have followed this strategy have grown up by 22 times. In 1 year, you have seen the risk beyond 50% a year. So index has shown the risk beyond 50% a year, while you cannot see the risk beyond 5% a year because you are protected. So indirectly, you have reduced the risk and you have enhanced the returns. So people who are saying that higher the risk means higher the return, we don't believe in this. We say that this is wrong line actually. Don't take high risk to generate good return. Do smart work. So smart calculation make high returns. Here we have chosen two smartness. This is very difficult actually to believe on the index. So the first smartness, what we did, we have believed on the index because index can't become zero. Sooner or later it will rise. After 200 years also, index will remain there with best 50 stocks. So first smartness is trade in index, invest in index because it cannot become zero. And second smartness is always take protection. Protection is not the cost to you. It has reduced your risk as well as it has enhanced your returns. Just look at the long-term prospect of the protection. Like this is buying an insurance. We buy insurance. Sooner or later, we get the claim out of that. Mr. Warren Buffett, he has the rich experience of more than 79 years of stock market. He had made billions of dollars from stock market. And he is summarizing his investment experience in just 2 lines. There are only 2 rules of investment. Rule number 1, never lose money. Just read this line again. Never lose money. The person who had made billions of dollars during 79 years. And he is saying never lose money. That should be the rule number 1 of investment. And rule number 2, never forget rule number 1. So now your responsibility has increased to a very, very, very great extent. You need to make or you need to follow these kind of rules to create wealth in your life. Never lose money. So it is very important. The learning is that this is my responsibility to protect my portfolio in any kind of situation. If I can protect it, sooner or later I can grow it. So I am having one question to all of you. The question is going to come on your screen. The question is, have you done any kind of investments in equities or mutual fund till date? Have you done any kind of investments in equities or mutual fund till date? If yes, write down yes, else write down no. Everyone, last 3 seconds. 3, 2, 1, and 0. So friends, I am very happy to share that all of you have done some or other kind of investments in equities or mutual funds. So it is very nice. You are going to understand the complete strategy very easily. So we have already crossed 20 minutes. We are just having 40 minutes more, and you are going to understand unbelievable thing today. So just participate in the same way. So friends, our upcoming program is on 17th August after 2 days, means on Tuesday. And the program name is Fundamentals of Futures and Options. This is also a free webinar. During this 2 hours webinar, we are going to understand what are the futures and options. What are the simple hedging techniques? How you can reduce your risk from the investments? What are the myths and opportunities? And finally, we will understand the financial freedom, how you can achieve financial freedom. So what you need to do, if you want to opt for this program, you have already got the link. Kindly register yourself. This is completely free webinar like this. So friends, till now, what did we understood? We understood that what are the benefits of properties? What are the problems with individual equities? What are the benefits of index? How we can have the protection? What will be the net impact of protection in longer run? Now we want to understand all these things in practical market. So we are going to understand 3 plans: relax plan, basic plan, power booster plan. So we have made the example of rupees 1 crore over here. Doesn't mean that you have to invest minimum 1 crore. You can do this kind of investment with small amount also. But we have taken the example of 1 crore. Suppose, my dear friends, you are having 1 crore rupee in your bank account. You want to invest that 1 crore rupee. You want safety as well as growth. Come on, do you want this or not? You want safety as well as growth in your portfolio. Come on, yes or no? Give me the answer. I need your participation. You want safety of funds also as well as growth also. You can get safety from FDs also, but we are not getting good growth out of that. So what we need to do? So we are going to bifurcate this 1 crore rupee in 2 parts. 30 lakh rupee and 70 lakh rupee. 30 lakh rupee we will park in equities, and 70 lakh rupee we will park in debt. That means you can park in FDs, you can park in RBI bonds, in Bharat bonds, in different kind of bonds where you are getting safety as well as fixed income. Wherever you are going to get good safety, you are going to get low interest. But we should be happy with that. By making the combination of equity and debt, you can understand that you can rise at a very good extent. We will understand this. So first, we have invested 30 lakhs rupees in equity segment. What we will do? We will buy the index ETFs. What is the meaning of ETF? ETF means exchange traded funds. Those are the listed funds. So that means indirectly, instead of buying individual share, you will buy the index. So you have got the delivery of index in your Demat account. You will put them as collateral. You will mark them as pledged, as collateral. And on this collateral valuation, on this collateral margin, you are going to buy index futures of rest 70 lakhs. So ultimately, you were having 1 crore rupee with you. But by investing 30 lakhs rupee only, you have made the portfolio full 1 crore. Have you done this kind of trade for first time? No. You have already done these kind of trades in properties. Whenever you are buying the property of 1 crore, normally you pay 30 lakhs rupee from your bank account and 70 lakhs rupee you are taking the loan. And then you repay that loan, and when you complete that loan, you are getting the property rights completely in your name. So the same work we are going to do with Nifty. For us, Nifty is white ka property. So you have invested 30 lakhs rupees only, but you have made the portfolio of rupees 1 crore. Now, if market will rise, you are going to earn on 1 crore. And when market will fall down, obviously you are going to lose on 1 crore. Yes or no? Come on. Yes or no? Ultimately, by investing 30 lakhs rupee, you have made the portfolio of rupees 1 crore. If market will rise, you will earn on 1 crore. If market will fall down, you will lose on 1 crore. Now, I don't want you to lose on 1 crore. What will you do? Come on. I don't want you to lose on 1 crore. What will you do? Come on. Everyone, I need your participation. You guys are really fantastic, as well as you understand the concept very nicely. Very nice. Anil Bhaiya, very nice. Dipesh, Mahesh, very nice. Very nice. You will buy the protection. You will buy the put option. For that, you need to pay the premium. Yes or no? Come on. For that, you need to pay the premium. You want to protect yourself. So you need to pay the premium. Very nice. Very nice. So you will pay this premium. So 5% you are going to pay the premium. That means indirectly 5 lakh rupee you have paid. But this 5 lakh rupee premium will give you the surety that your 1 crore portfolio is going to remain protected. Yes or no? Come on. Yes or no? By paying this premium, you have got the surety that your portfolio is completely protected now. You guys are really fantastic. You need to pay one more cost. Can you tell me what will be that cost? You need to pay one more cost over here. Can you tell me what will be that cost? Come on. You need to, very nice, very good. You need to pay financing cost also. Why financing cost? Because you have made the portfolio of rupees. Yeah, brokerage charge is really very minimal now. We have reached to the era where normally zero brokerage or very nominal brokerages are there. Very nice, Dipesh. That is perfectly correct. So here you have made the portfolio of rupees 1 crore, but you have invested 30 lakhs only. 70 lakh rupee you have bought the future. When you buy the future, come on, listen to this properly. When you buy the future, you need to forward the future every month. When you forward the future to next month, you need to pay the forwarding premium. 30 rupees, 35 rupees, 40 rupees, 50 rupees, 20 rupees. So if we consider the annual premium, it comes to around 4 to 5% a year. So indirectly, that is the financing cost to me. Yes or no? Come on. Indirectly, that will become the financing cost to me. Yes or no? Yes or no? Yeah. So as Khojema, yeah, my request is kindly give me the reply on everyone mode. Anna, don't give me the reply on private mode. It becomes very easy for me to answer all of you. Anna, thank you. Yes. So the financing cost indirectly we are going to pay. Now this has become the fantastic opportunity for us. Just see the second side of this. Indirectly, you have got 70 lakh rupee at 5% cost. So if in India we are getting the funds at 5%, we should take it. Yes or no? Come on. If in India, if we are getting the funds at 5% cost, we should take it. And we should put our 70 lakh rupee in debt. RBI bond is giving us 7.15%. How much? 7.15% RBI bonds are giving us. So what is the meaning? We will pay 5% cost. We will get 7% over here. Indirectly 2% we are going to get more. So by that way, we can reduce the cost of put option indirectly. So our cost will reduce. So indirectly our profit will automatically rise. Thank you. So 70 lakh rupee 5% cost means indirectly 3.5 lakh. Just 3.5 lakh we need to pay as forwarding cost. And we will get 70 lakh rupee for a year. So my total cost has reached to 8.5 lakh rupee. It looks little bit high, but this is very nominal. We will understand this. 8.5 lakh rupee on 1 crore. So indirectly 8.5%. And this 8.5% gross cost has given you two advantages. Advantage number one, that your complete strategy is protected. This is very important. We have already learned from Warren Buffett. And today is the Independence Day. So it is very important for you to understand this. So first, what we have got the complete protection. And second thing, we have got the advantage of 100 rupee by investing 30 only. So we have got the advantage of financing. 70 lakhs rupees are completely idle in our account. We have not used it. We will put them in debt market. So indirectly, this 70 lakh rupee is going to earn fixed income. If we can generate just 7.15% only, indirectly 5 lakh rupee every year we are going to earn as interest income. Yes or no, my dear friend? Without any hurdle, without any risk, without any probability of bad debt, we are going to generate this 5 lakh rupee every year. My super intelligent question to all of you. What is your net cost? Come on. What is your net cost? Everyone, what is your maximum risk? In any situation, you cannot lose more than 3.5%. Do you understand this? In full 1 year. So if market becomes 20%, your maximum risk is 3.5% only. But if market will rise, you are going to earn on full 1 crore rupee because you have made the portfolio of rupees 1 crore. What you are getting, try to understand. In any situation, you are having defined risk. And simultaneously, if market will rise, your complete 100% money is making money. This is not the balance fund that you are going to generate 70% or 60% or 20% returns only on equity side. You have used your complete portfolio over here. You were having 1 crore rupee with you. You have created the portfolio of rupees 1 crore only. But with two great features. Downside, you are having limited risk. Upside, you are earning on full portfolio. The plan name is Relax Plan. Why we have named this plan as Relax Plan? Because after understanding this plan, we feel relaxed. Do you understand what is the second relaxation over here? The second feeling of relax is that all the trades are going to happen in your own account. You are going to do this at your end only. So ultimately, your money is completely secured. You are not going to give this money to anybody else. This is the feature of financial freedom. Financial freedom means we should have the independence. My money should remain with you. I should have the full rights to take the action, to take the decision. Whenever I want to withdraw, I should have the power to withdraw it without paying any extra cost. That is called independence. So you are going to get that independence. Now the second plan, very intelligent plan, though it may not be applicable for everyone, but few of you can use this plan. The second plan name is basic plan. What exactly the basic plan is, my dear friends? The initial part of basic plan is completely same. 30 lakhs rupees you have invested, 8.5% is the cost, and from this 8.5% cost, you have got the protection as well as the financing. Everything is same. So what is the change? Change is how you are going to use rest 70 lakhs rupees. Friends, in first plan, we have used that 70% fund in bonds. There we were generating 7% only. Now suppose some of you are having some other ventures. There they can generate 9%, 10% easily. So if they are having the fixed opportunity to generate 9, 10% easily, what we will recommend? We will recommend them to use this 70% fund over there. Ultimately, our objective was to have safety as well as to have fixed returns. So if you can generate more returns in somewhere else, use this 70% fund over there. Few of you might have some loans and you are going to pay the interest on that. We will recommend you to use this 70% fund to repay your loan, to save your interest. If you can save 9, 10% interest income, indirectly that is your income only. No, come on, yes or no, my dear friends. Did you understand this? I am not saying that this may be applicable for everyone. There might be few people who are not having any kind of venture. There they can generate 9, 10%, and they are also not carrying any kind of loan also. There might be a lot of people, so they cannot use that. But few of you can do this. So if you can use the rest 70% fund at little bit higher rate by repaying your loan or by using that fund somewhere else. So if you can generate 9%, indirectly your income will be 6.3 lakh. So your cost will be 2.2 lakhs and so on. That is up to you. So that is called basic plan. So in basic plan, you have used 30% money only in equity segment, 70% you have used somewhere else. That is the difference. Now the third plan is called Power Booster Plan. Why we named this plan as Power Booster Plan? Here you are going to use the power of your equity or mutual funds. Now this is going to give you altogether a fantastic independence. When I asked you that how many people have invested money in equity and mutual fund, all of you have given the answer yes. That means you are having equity or mutual funds in your portfolio. Do you know? You can use your current equity or mutual funds for this product. So you don't have to pay that money also. In earlier plan, you have invested 30 lakh rupee to buy the index to put them as collateral. But suppose you are already having the equity or mutual fund portfolio to put as collateral. Then you don't have to invest this 30 lakhs also. Without investing this 30 lakhs, you can create the portfolio of full 1 crore. Here we have taken the example of 30 lakhs. You can take it for the 10 lakhs also, that by investing 3 lakh rupee portfolio, you can make the portfolio of 10 lakhs and so on. So instead of investing 30 lakh rupee, you have given the stock of 30 lakhs rupee as collateral. You have bought the future of full 1 crore. So you have not invested any money, but still you have made the portfolio of rupees 1 crore. If market will rise, you are going to earn on 1 crore. If market will fall, you are going to lose on 1 crore. But we know the key, that we will not lose on 1 crore because we are going to buy the protection. This time you need to pay the financing cost on full 1 crore because you have not invested your 30 lakhs rupee. So on 1 crore, 5% means 5 lakh rupee will become the financing cost. So instead of 8.5%, my cost has increased to 10%. But the fantastic benefit what I have got, I have invested just this 10% only. My 90% money is idle. So for portfolio of 1 crore, we have invested 10 lakh rupee only. 90 lakh rupee we can use somewhere else. If we can generate 9% income on this 90 lakhs, indirectly 8.1 lakh rupee, we are going to earn as fixed income. What will be my net cost? Come on, give me your mathematics power. Show me your mathematics power. What will be your net cost? This is the power of smart work. Your maximum risk is 1.9%. Do you understand? This much money normally you are paying as far as advisory fee to the people. Do you know that? And this is your maximum risk in your investment of equity segment. Whenever market will rise, you are going to earn on full portfolio. Whenever market will fall down, your maximum risk is this much only. So now people who have done these kind of investment, what would have been their returns? Do you want to see that? Come on. Do you want to see that people who have followed this kind of strategy in past, what would have happened with them? Yes or no? Let us understand this. Be active with me. So we have already passed around 35 minutes, just 25 minutes. And we are going to understand the deep question of all about this strategy now. Okay, so this is the advanced level now. So first, let us understand the complete table. The first column is showing you the calendar last day of the year. 31st December 2002, 2003, and 2020. So calendar last day of the year. The second column is showing you the Nifty level on that day. The third column is showing you the investment done by you of rupees 1 crore. The fourth column is showing you that if you would have invested this money in index में पैसा invest किया लेकिन hedging नहीं ली, protection नहीं लिया, तो भी आपका पैसा बढ़ करके this 1 crore would have become 12 crore. And the fifth column is the main strategy point. This column is showing you that if you would have invested in index with protection, then your 1 crore would have become 22 crores instead of 12 crore. How it happened? It happened because of the simple reason. Whenever markets are rising, you are also earning money. But whenever markets are falling down, you are remaining protected. And this is the simple logic that you have outperformed in longer run. Market has gone up by 71%. You were having net cost of 3%, 4%. So you have earned 68%. You have earned little bit lower when market has gone up. Market has gone up by 11%. You have earned 7 to 8%. But when market has fallen down by 52%, my dear friends, your maximum risk was 3 to 4% only. Do you understand this? Come on. Do you understand this? What a fantastic independence it is providing us. We are completely relaxed. We know that my 1 crore can never go below 97 lakhs in any situation. And still I can generate returns on full 1 crore. Thank you. So what exactly had happened? Just listen, just try to understand this. During this 2007, it was the earlier high. You know that. In 2008, market has crashed. Let us see that what exactly had happened. In 2007, Nifty was running at around 6,200. And your portfolio valuation was around 4.95 crore. So around 5 crore you were having the portfolio valuation. Next year, market has fallen down from 62 to 29. Almost more than 50% it has fallen down. But your portfolio of 5 crore has never gone below 4.8 crore. Why? Because you were protected. Next year, market has recovered from 29 to 52 only. Still, we have not reached to 6,200 level. But your portfolio has crossed 8 crore rupee valuation. Why? Because when market has fallen down, you remain constant. When market has recovered, you created new high. Again, market has fallen down in 2010 to 11. Same story is repeated again. So whenever markets are falling down, you are repeating this story. So sooner or later, you are going to outperform. You just have to wait and watch. You just have to believe in long term. That is the beauty of this strategy. In last 18 years, you have never seen the risk beyond 4% a year, while you have generated returns of more than 18% a year CAGR. This is altogether an excellent return. So you have reduced your risk as well as you have enhanced your returns. We are doing this strategy since 2014. We have seen the miracles in this strategy. This blue line is showing you the performance of index, and this red line is showing you the performance of customer. The similarity is that whenever markets are rising, both the index are running at the same pace. And dissimilarity is that whenever markets are falling down, customer index is not falling down to that extent. Why? Because it is having the protection. And that is why day by day this difference is increasing. Suppose in 2014 you have invested 100 rupee in index and 100 rupee in this strategy. When your 100 in index has reached to 114, you have reached to 120. When your 114 has fallen down below principal to 90 rupees, you are in loss. But your 120 has never gone below 112. Why? Because you had the protection. Again, your 90 has recovered to earlier high of 114. But till that level, you have created new high of 141. And that is why these kind of differences are increasing day by day. So what features we have understood till now? We understood that this is the combination of equity, futures, debt, and safety. You have bought the equities. You remember that? Yes or no? Come on, tell me. You have bought the equity over here. Yes or no? Yes or no? Everyone. This is the fantastic combination. We have not done any kind of magic over here. This is the simple thing. You have bought equity. You have bought futures. Why you have bought equity index? Because index can't become zero, sooner or later it rises. Why you have bought futures? Because we are getting the futures at just 4 to 5% a year. Why we have invested money in debt? Because we are generating more returns in debt. So we can reduce our cost. Why we have bought safety? Because safety reduces our risk as well as enhances our returns. So this is the combination of equity, futures, and safety. That is why we are having calculated risk. We are investing money only in index because index can't become zero. So we are having low risk profile. We have seen past strong track record, 4% risk and 18% plus CAGR return. We are having complete infrastructure of this strategy, complete back office of this strategy. So on just click of button, you can see the performance on everyday basis. People can have systematic withdrawal also. People who are very near to retirement, they want to have safety, they want to have growth. Simultaneously, they want to have regular income. They can get from these kind of products. There are no lock-in period. Whenever you want to enter, you can enter. Whenever you want to exit, you can exit. But still, we recommend to have at least 5 to 10 years of horizon for these kind of investment, because ultimately, this is the long-term investment. You are going to understand the quality and the beauty of this strategy once market will go up and fall down and go up. Yes or no? So it will take around 5 to 10 years to understand the real beauty of this strategy. Yes or no, my dear friends? Yes or no? Come on. Very nice. Very nice. Very nice. So your participation is giving me the energy, the voice, the confidence, what I am showing you. Why I am getting that? Because of your participation. So participate it. Very nice. We have the dedicated team. They are going to help you step by step. You are going to have a lot of questions during this journey. The strategy looks simple, but when we are going to execute it, you are definitely going to have a lot of questions. Many times exchange changes something. Like recently, exchange has changed the lot size of index from 75 to 50. It has created a lot of confusion. So at the time, you are going to require proper solution so that your money should go up also, as well as you should have the protections also. We have the algorithms so that you can get speed, accuracy, consistency. You don't have to see the screen every day by day. Automatically, these algorithms will advise you at the right moment when you need to do the next action. You can plan your retirement, kids' higher education, kids' wedding, these kind of bigger advantage or bigger goals you can fulfill from these kind of products. And finally, the golden line. The golden line is all the trades are going to happen in your own account. Your money will remain with you. We have already discussed this. So you are completely independent on this Independence Day. Come on. If you feel really independent, write down I over here. Come on. After understanding this strategy, if you really feel independent, come on, write down I. Write down I over here. Write down I. Yes. Everyone. If you really feel independent, this is very important. So in our this regional language, okay, in our scripts, Scripture now, we listen to this line, Paradhin Sapnu Sukhnai. That means if you are dependent, you are not getting, yes, exactly. So you are not getting the happiness in dreams also. So it is very important to have the independent life. Mr. Larry Hite, what he's saying? Larry Hite saying that I have just two basic rules about winning in trading as well as in life. जिंदगी में जीतना है या इन्वेस्टमेंट में जीतना है, we have to follow these two rules. Rule number one, if you don't bet, you can't win. If you don't take any chance, you cannot make wealth. For creation of wealth, just see the example of anybody in your life who have created the wealth. They have taken the chances. It is very important for you. So are you ready to take the chance? Come on. If you are ready, write down yes. Are you ready to take the chance? You need to take the chance to create the wealth. Without taking chances, you can't create wealth. But simultaneously, taking chance doesn't mean taking blind risk. Again, repeating it. Taking chance doesn't mean that you have to take blind risk. No. If you lose all your chips, you can't bet. So it is very important to understand that you should take calculated risk only. If you go wrong, still you can stand again, take the new chance. So that is what the beauty is. So we need to understand the power of calculated risk. So friends, by this way, we have completed this session. Now we are going to take super advanced topic. There might be a lot of questions. During our past 230 webinars, we have got a lot of questions from participants. So we have made the PPT of those questions also, so that you may get these questions after some time, but you will get the answer as of now only. The first question that normally people ask us, how we can have systematic withdrawal plan. So friends, we have seen more than 18% CAGR return on this. So if you can withdraw the FD returns every year also, still it is going to give you good returns. For example, suppose 1 crore rupee you have made, you have invested. So 6% every year you can withdraw. That means 0.5% every month. So if you do that, what will happen? So 1 crore rupee you have invested, 6 lakh rupee you are withdrawing every year as your regular income. Still your 1 crore rupee portfolio has reached to 15 crore. So during these 18 years, you have already withdrawn more than 1 crore rupee. And still you are having the portfolio of rupees 15 crore plus. So indirectly you have got regular income as well as the capital appreciation. So people who are near to retirement, they should use this kind of plan over there. The second point, what is the minimum exposure? So come on, can you tell me what is the lot size of Nifty? You can do this with one lot also. What is the lot size of Nifty? Very nice, very nice, very nice. Everyone, what is the lot size of Nifty? Very nice. So the lot size of Nifty is just 50 shares. The price of Nifty is around 16,000 or 16,500. So indirectly you are having the lot size of 8 lakh rupee. So that means just by having the exposure of 8 lakh rupee, you can do these kind of experiments. Again, for the exposure of 8 lakh rupee, how much you need to invest? That is the third question. How much I need to invest? So we have seen 3 plans over here. The first plan was relax plan. There you are going to invest full 100% money. The second plan was basic plan. You are investing 30% money only over here. 70% you are using somewhere else. Come on. Do you remember that? Yes or no? In basic plan, you are investing 30% only in equity segment. 70% you are using somewhere else where you can generate little bit higher returns. Yes or no? Everyone. Come on. I need your answer. Very nice. Very nice. So in basic plan, you are investing 30% only. In power booster, how much you are investing? Come on. In power booster, how much you are investing? Come on. Very nice. In power booster, how much you are investing? You need to invest only 10% money in power booster. And you can use 90% fund somewhere else. So for exposure of 8 lakh, in relax plan, you need to invest full 8 lakh rupee, 100%. Can you tell me in basic plan how much you need to invest? In basic plan, how much you need to invest? Come on. Everyone. For exposure of 8 lakh rupee, for exposure of one lot, how much you need to invest? In basic plan, everyone. So you need to invest just 2.4 lakh rupee in equity segment, and rest 5.6 lakh rupee you are going to use somewhere else. So in equity segment, just 2.4 lakh rupee, around 2.5 lakh. And in power booster, you are going to invest only 80,000. What exactly the learning is? The learning is that you can do these kind of investment with a very small amount also. A small investor or a medium level investor can also do these kind of investment. We just need to take care that in power booster, you should have 30% stock as collateral. So around 2.5 lakh rupee stock you should have. Then you can invest 80,000 rupee and you can do this product. The next question comes that we have seen 3 plans over here. I want to understand the risk return profile of all the 3 plans on one sheet so that I can compare it. Do you want to know that? Come on. Do you want to know that? The risk return profile of all the 3 plans on one slide so that you can compare it. Yes or no? Yes or no? Very nice. Very nice. Let us see that. The first plan was relax plan. क्या किया था हमने relax plan में? 8 लाख invest किया, returns भी 8 लाख पे. You have invested 8 lakh rupee. You were earning on 8 lakh. How much your risk was there? Come on, can you tell me how much your net risk was there in relax plan? What was your net risk in relax plan? Come on, can you tell me? Everyone. Do you remember that? What? Very nice, Dipesh, very nice. Yes, very good, Suhani, very nice. So your net risk was around 3.5%. So 8 lakh rupee, 3.5% of 8 lakh is around 30,000. This is your maximum risk during 1 year. So your portfolio will never go below 7.7 lakhs in any situation. While you are going to earn returns on 8 lakh rupee. So this was the relax plan. The next plan was basic plan. There you are investing 2.4 lakh rupee only. But on how much portfolio you are going to earn money? What will be the exposure value? How much money, on how much money you are going to earn income? Come on. On what kind of portfolio valuation you are going to earn income? Come on, tell me. You have invested 2.4 lakh rupee, but you are going to earn on full 8 lakh rupee. This is the beauty. Your risk was 8.5%. Your cost was 8.5% on 30% portfolio. Do you remember that? No. So on 8.5% on 8 lakh is around 70,000 rupee. But the biggest thing what you have got 5.6 lakh rupee idle to invest somewhere else. Yes or no? You have got 5.6 lakh rupee free to use somewhere else. Yes or no? If you can generate 9% income on that 5.6 lakh rupee, indirectly 50,000 rupee you are going to earn as additional income from that idle fund of 5.6 lakh. So what will be your net cost? Come on, can you tell me? This is very intelligent question. What will be your net cost? Come on. Very nice, very good. What will be your net cost? 70,000 rupee was your cost for index long-term strategy. You have got 5.6 lakh rupee free to use somewhere else. If you can generate 50,000 on that, so your net cost is just 20,000 rupee. In power booster, you have invested 80,000 rupee only, but still you are going to earn returns on full 8 lakh. Your net cost was 10% of 8 lakh, that is 80,000 rupee a year. But 7.2 lakh rupee are idle to use somewhere else. You can generate 65,000 rupee interest income on this. Ultimately, your net cost is 15,000. My dear friends, here you may have one more question. That what will happen if we cannot generate 9% income? We have considered 9% over here. So you can assume 7%. Don't worry. 7% you can earn easily. Yes or no? Yes or no? 7% from the idle fund you can earn easily. Yes or no? Everyone. So 7.2 lakhs, 7% on this 7.2 lakhs is 50,000 rupees. What will be your cost? 80,000 minus 50,000, 30,000. That is only the difference, no? So from 15,000 risk, your risk will reach to 30,000. But that is negligible. In stock market, it is nothing. So that is the beauty. The next question is very intelligent question. We have understood all the concept. We have understood the strategy. Now the final and very important question is that what will be my cash flow? कब कितना लगाने को आएगा? Though you understand this, but still I want to clarify it. Suppose for one lot. So what will be your initial investment in relax plan? Come on. Now write down the answer quickly. We have the limited time, but I want your participation. What will be your initial investment in relax plan for one lot? Very nice. Very nice. 8 lakh rupee. What will be your initial investment in basic plan for 1 lot? Come on. What will be your initial investment? Very nice. Very nice. Very nice. So in basic plan, your investment will be 2.4 lakh rupee initially. What will be your initial investment in power booster? Come on. You guys are really fantastic. You understood this strategy completely. Very nice. So 80,000 rupee will be your investment. Jayesh bhai, very nicely you have written it. 30% stock you should keep at collateral also. Very nice. Now again the next question. What will be the annual cost? Come on. So what will be the annual cost in Relax plan? What will be the annual cost in Relax plan? Come on. So 3.5% in rupee terms, because now you want to understand in cash flow terms. So what will be the annual cost? Very nice. That will be around 30,000 rupee. What will be the annual cost in basic plan? Annual cost in basic plan will be 70,000. Your net cost is 20,000, because on rest 5.6 lakh rupee you are going to earn somewhere else. So in your equity segment you can see the risk of 70,000, and in power booster you can see the risk of 80,000 rupee. So that will be your annual cost. Though from the 70,000, 50,000 you are going to generate the income from 5.6 lakh rupee. Now how you are going to tackle this cost? Either you can repay this cost at annual level in your account only. You don't have to pay this money to somebody else. You need to put this money in your account every year. Or what you can do, you can convert this annual cost into SIP. Instead of 30,000, you can invest 2,500. Here we have written not applicable, because for 8 lakh rupee portfolio, it can be managed from this fund only. We will explain you when you will invest money. But this is very simple. In basic plan, instead of 70,000, invest 6,000 rupee every month. So automatically it will become 70,000 after a year. Yes or no? Yes or no? So instead of investing 70,000 at one shot, you can invest 6,000 rupee every month. So that is called SIP model. Instead of 80,000 every year, you can invest 7,000 rupee every month. So either you can invest annual or you can invest monthly. Whatever you feel comfortable, you can do that. There are a lot of people who are into business segment. So making 6,000 rupee investment every month is very easy for them. So they can invest 2 lakh 40,000 initially, and 6,000 rupee they can add every month. And by this way, they can make the portfolio of rupees 8 lakh. My dear friends, if you really want to get the independence, just listen to this. In your surrounding, there must be one person who are having the worth of more than 100 crore as of now. Yes or no? You can find out one person only. एक आदमी तो ऐसा है कि नहीं है आपके जीवन में आजू बाजू में जिसकी वर्थ आज 100 करोड़ से ज्यादा की है. Yes or no? Yes, very nice. How he have created that 100 crore rupee worth? Had he invested the complete money at one shot? No. He had done the deal one by one. Might be the person who is having 100 crore rupee properties with him. What he has done? He might have bought the property of 2 lakh rupee only initially. By investing 30,000, 40,000 rupee, rest in installment. When he had made the complete payment of the 2 lakh rupee property, he had purchased new property of 3 lakh. Then he had purchased new property of 4 lakh, 5 lakh. Then he had purchased new property of 10 lakh. And by that way, now he is having the property portfolio of more than 100 crores. This is the simple example. That is how people are doing the marathon. They are taking 1 step, 2 step, 3 step. By that way, they are completing 1 kilometer, 2 kilometers. And later on, they find that they have completed 42 kilometers and they have completed the complete marathon. So what you need to do, if you really want to make the portfolio of 10 crore or 20 crores in your life, you need to start the exposure with small amount only. Take the example of 8 lakh rupee only by investing 2.4 lakh. Come on. Is it difficult to invest 2.4 lakh initially? Is it difficult? Come on. Yes or no? Is it difficult? It is very easy. And again, where are you investing your money? You are investing your money in your account. Is it difficult for you? Come on. Is it difficult for you to invest your money in your account? It is not at all a difficult thing. But by this way, you can move toward the completion of marathon. You can complete the full marathon by taking this one step. So my suggestion is to all of you, take action. Learning thing is just the 10% part. executing thing is the real 90% crux. Do you believe this or not? Come on. Do you believe this or not? The main part is execution. We learn a lot of things in our life and we don't take any action and it becomes rubbish in our life. We are going to waste this 1 hour also. Very nice. So action is greater than inaction. Action is very important. So my suggestion to all of you, do take action. Just don't worry about this. You are not going to become insolvent in this strategy. You are having limited risk in every situation. Yes or no? Come on. In any situation, you are having limited risk. You should take this kind of calculated risk. Without taking calculated risk, you cannot create wealth. So this is my suggestion to all of you. Great. So this strategy is applicable for whom? Who should do this strategy? People who want to come out from debt trap. जो लोग डेट के चक्कर से बाहर निकलना चाहते हैं, and who really want to get financial freedom. This is the best day today to take the action. The second point is who want to have calculated risk. Those people should take this strategy. The third is they should have more than 3 years of horizon to remain invested. If you are making the tick on all the 3 answers, that yes, 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 then do it. Don't worry. Secondly, this strategy is not good for whom? This strategy is not good for people who are having limited, means intraday horizon or the short-term trading horizon. They should not invest money in this strategy because this is not the short-term strategy. This is not the intraday strategy. Which plan you should choose? You will have this question. If you are very near to retirement, if you want regular income, if you have very low risk profile, you should choose relax plan. If you are a young investor, and if you can invest regular money as SIP, you should choose basic plan. And if you are a matured investor, you have already your portfolio and you can invest further also as SIP, you should choose power booster plan. Come on, which plan is good for you? Come on. If it is relax plan is good for you, write down R. If basic plan is good for you, write down B. And if power booster is good for you, write down P. Come on, you have to select at your end only. Which plan is good for you? Come on. If relax plan, write down R. If basic plan, write down B. And if power booster, write down P. Very nice, very nice. I can see a lot of B as well as a lot of R and some P. Very nice. So this will help you to understand which plan is good for you. The next question is, what will be the commercial of Finideas? Finideas is going to participate extensively in your this investment journey, in your this financial freedom journey. You require one coach. They will help you with through their experience that what action you should take to take the maximum advantage of this. And that is again at a very nominal fee. This is a very nominal fee. If your portfolio is below 1 crore, we are going to charge just 75 paisa for 6 months. If your portfolio will reach to 1 crore, just 62 paisa, again reduce. And when you reach to 5 crore, that you are going to reach very soon. And your fee will reduce to 50 paisa only. If you compare this with others, you will find altogether a negligible thing. And by this way, you can achieve everything. You will achieve wisdom. You will achieve advisory. You will achieve tracking, reporting system, how you can enhance your returns with the optimum fund utilization. Everything we can provide you. The next question comes that I have already invested money in equities. Can I shift my equity portfolio to this? You should do that. We are at almost the top level. Suppose you are having the 10 lakh rupee portfolio and if you are selling it, sell it. You will receive 10 lakh rupee, invest that money in index long-term strategy. So ultimately your equity portfolio will remain constant to 10 lakh only. Now if market becomes double, then your 10 lakh rupee equity would have become 20. This will also become 20, almost 20. So you are going to earn similar returns. But simultaneously, if market becomes half, then your equity will become from 10 lakh to 5 lakh. But here your portfolio will never go below 9.6, 9.7 lakh. So downside, you have got the protection. आपका जितना wealth अभी बन गया उतना protected रहेगा. Upside में अभी भी आप grow करोगे. So all the 3 features you are getting over here. Come on. Yes or no? Yes or no? All the advantages you are getting over here. You are going to earn equity returns. You are going to have the safety of FDs and still your portfolio will remain constant. The next question comes that we understand that in longer run index is going to go up only. Then why to buy the protection? Protection is very important. Because of protection, when market fell down, you have not fallen down. Rather, your number of equity has gone up. Do you remember that? Yes or no? Yes or no? Because of protection, when market fell down, your portfolio has not fallen down. Rather, your number of equity has gone up. And next year, when market has recovered, you have made new high. And because of this reason, protection is very important. Just assume that if in your index you get one more feature, that whenever market will fall down, you will not fall down. Do you know what will be the miracle? In normal language, 1100 index in 18 years has reached to 14,000. That we have already seen in our life. But if we add one more feature, that whenever market will fall down, my index will not fall down. Do you know where your index will reach? This 1100 index, instead of 14,000, it will reach to 40,000. Just by adding one more feature, that whenever market will fall down, we will not fall down. Come on. Did you understand this point? Did you understand this point? So this protection is not at all the cost to us. Many times we feel that 8.5% is the cost and index is rising by 13-14%. How we are going to earn money? Try to understand, by making that 8.4% or 8.5% cost, you come to altogether different index. Your index gets changed. This 1100 to 14,000 index is the index for people who are losing money when market falls down. But if you don't fall down, when market falls down, then you are going to shift from this index to this index. That is, this 1100 index will reach to 40,000 for you because you are having the protection with you. So protection is not the cost to you. Just see this example in graphical manner. When markets are rising, both the index are rising simultaneously. But when markets are falling down, you are not falling down because of that protection. And that is why this difference is increasing day by day. The next question comes, is it right time to invest money in this strategy? Come on, what do you say? What do you say? Is it right time to invest money in this strategy? Come on. What is your reply? Yes or no? Yes or no? Is it right time to invest money in this strategy? Try to understand. We are almost at the highest level of index. If market will still rise, we will earn money. And we feel that market will rise. We want to take chance. We will earn money. And if because of any reason, if we go wrong, and if market falls down sharply, we are protected. We are getting best of both the worlds. Very nice. Very nice. The next question comes. We have seen 3 plans over here. What happens after some time? I want to switch from one plan to another plan. This is also an advantage. Do you know that? When market falls down sharply, you can shift from one plan to another plan to take its maximum advantage. We will recommend you time to time. And without charging any extra fee. Come on. Without charging any extra fee. Whatever fee we have taken, that is 75 paisa. That's all. Nothing else. No other hiding charges. Nothing. So we have shown you our mission, providing transparent solution to everyone for achieving financial freedom. We want you to achieve financial freedom with full transparency. We have got more than 500 plus reviews on Google. Just go there and read. You will understand what people are saying about us. So getting reviews on Google is not an easy thing. If people are not happy, they can write anything over there. Do you know that? Yes or no? Come on. Yes or no? If people are not happy with our services, they can write anything over there. Yes or no? People are completely independent. But still, if we are getting 4.8% rating out of 5, that means that we prove what we do. The next question comes, can NRI do the investments in this strategy? Yes. Yes, NRI can also do this kind of investments through their NRO account. We will help them. So if you are having NRI people in your surrounding, and if you are also an NRI investor, you can do this. The next question, why Finideas? It's a very important question. You should choose Finideas because we are SEBI registered investment advisor. So everything is in white. Everything is in authentic way. Everything is in legal way. We don't break any rule. We have the complete back office online. So all the reports you can get just by click on the button. We have the experience of more than 18 years in these kind of trades. So you can take the advantage of that experience. And finally, we have the algorithms so that you can get speed, accuracy, and consistency. Friend, these kind of commercials are just the limited time offer. Just believe it. So we are not going to give a lot of these kind of offers in later on. So you can take the advantage immediately. So now, friends, if you have the interest in this kind of strategy, what you need to do. So again, I am giving you one free offer. Complete your KYC as of now, completely free. You don't have to pay anything to complete your KYC. After completing KYC, what you are going to get? You will get our portal to have research over there, that what kind of strategy I should choose, what kind of exposure I should take, how much I need to invest, how much will be the cost. Everything you will get the access. You just have to complete your KYC. Earlier, we were used to charge for KYC. We have made it free as of now. So this is the offer for you. The second point is, after completing the KYC, it will take around 5 to 10 minutes maximum. My team will also help you over there. We have the online chat portal over there, or we will give you the WhatsApp number. So if you find any kind of issue during your KYC, you can talk with our team. They will help you step by step, and you can complete it in just 5 to 10 minutes. Today is the holiday. You can take the advantage of the same. We have already given you the invitation to come on our 17th August program. Every Thursday, 4 p.m. we are having this program. Every Sunday, 10 a.m. like today, we are having this program. You can take the advantage of this program. So what you need to do, invite your friends also over there, if you really liked it. And we are going to give you the extra advantage if you invite your friends. Just ask your friends to write down your name as reference. If you do that, and if we get data that you have referred somebody else, we will give you some extra advantage. Like what? We will provide you some ebooks related to these kind of products. We will provide you some presentations. We will provide you some software access. We will provide you some education programs. So what you need to do, invite a lot of friends to opt for this program. This will be the win-win advantage for all of you. Yes, so people can forward the message what they have received. So you have already received the message in your WhatsApp. Just copy it and forward it to your friends. Or you can ask your friends that where the reference name is coming, write down your name. So we can track it easily. Great, friends. Again, and very soon you are going to get your reference code also. So you can use your reference code. So automatically software will detect your name. So just last 3 minutes, there are few lines what our customers are saying. We are using transparency in service. All the trades are getting executed in customer's own account. This is the smart work with innovative idea. Try to understand the depth of this message. Smart work with innovative idea. When market falls, our funds remain limited fall. People don't need to worry. Again, this is providing us the independence. Koi chinta nahi. It protects my funds against the worst situation. Making money in a most disciplined way. We are using full discipline. This is a great strategy. Combination of index with protection. Research and back data testing is really impressive. We are thankful to all our well-wishers. Because of your support, now this strategy has become popular worldwide. So thanks a lot for your support. Friends, if you really like this, don't forget to write review on us also. So what you need to do, you will get our review link over here. You can write down the review, what you will get. So after writing the review, send that review on this number. So when we receive the snapshot of your review, in 24 hours, we will send you an ebook about this product. So you can understand more about this strategy. So come on, you can send us one review also. Yes or no? Come on. Yes or no? Everyone. You can write us the review. Thank you, Dipesh. Thank you for this. Thanks, Khojema. Thanks a lot. Thank you. Thank you. And friends, now the last 2 minutes or 1 minute, now this is the chance for you to speak. So you can share your experience. You can ask your question if you have anything, so that you can be more clear. So I have given you the right to unmute yourself. Just feel free. This is our family only. So don't worry about this. So कौन लगेगा, कैसा लगेगा, उसकी चिंता किए बिना अपने आप को अनम्यूट करो. कुछ भी यदि आपको शेयर करना है तो शेयर करो. कुछ भी यदि आपके पास क्वेश्चन है तो क्वेश्चन पूछो. So that you will feel really independent, really financially freedom. So if you want to speak, unmute yourself, take the chance in last 1 minute, share your experience, or if you have any question, ask us the question. Come on, come on, come on. Take the advantage of this. Take the advantage of this. Unmute yourself. Just click on the unmute button, share your experience, or if you have any question, ask the question. Everyone, everyone, everyone. Yes, yes. So last 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3. Thank you, Dipesh. Thanks a lot. 2, 1, 0. Great, friends. So on behalf of Finideas, myself CA Govind Jhamar, I am thankful to all of you. And I wish आप अपने जीवन में खूब बड़ी वेल्थ बनाएं, खूब ग्रो करें, खूब एंजॉय करें उसे, और फाइनली अपनी आने वाली विजडम, आने वाली ये सारी विजडम अपने आने वाली जनरेशन को भी सिखाएं, so that you and your next generation should get financial freedom. Thank you. And friends, you will get the chance to register or to join us on our WhatsApp group for 7 days. If you want to opt for the WhatsApp group, you will get the link. After clicking on that registration link, you will get the link. Register means join our this WhatsApp group. In 7 days, you can ask us as many questions as you want, so that in next 7 days, your concept will become clear. तो अगर आप अपने concept को और ज़्यादा clear करना चाहते हो, yes, we are on Telegram also. You will get on the link of Telegram also. Yes, we are on the Telegram. So friends, once again, कुछ mix merge कर दिया हो तो मैं last में थोड़े instructions वापस देता हूँ. You will get the access to our WhatsApp group for 7 days. 7 दिन में जितना चाहो उतने क्वेश्चंस पूछो. कब मिलेगा वो आपको लिंक? जो ऊपर में आपको लिंक मिला हुआ है ना, टू नो मोर, click on that link, register yourself, and you will get the access to our WhatsApp group. Thank you once again on behalf of Finideas, myself CA Govind Jhamar. Thank you, thank you, thank you. Bye bye.